What are we going to see next week in the US market? Are we gearing up for some growth, or are we going to see this correction continue to take place? Well, to start this off, looking at the S&P here, we can see that we have obviously had somewhat of a positive week, but it wasn't as positive as you would have liked to have seen it. With regards to the recent decline, it was a bit of a sideways week, and we did want to see this be a bit more bullish. Now, I did have a few drinks last night, and I'm very tired, so please bear with me with this video. I'm pushing this out as quick as possible, but of course we are obviously below all of the exponential moving averages. It does look as if on the S&P we did hit the resistance on both the 19th and 20th of March. I think if we do manage to break these levels next week, we are going to see this, take off potentially, and hopefully see a lot more buying pressure. But the next support is all the way down here at 5192. So there is a long way to go for the next level of support. So that could indicate that there is more room for this correction to run. And especially when we have all of these moving averages above where we currently are, it's really going to push the price down. But you need to understand that investing these days isn't so much investing. People aren't really putting money into stocks in which they, speculate will go up. All it is these days, for the majority of the time, is it's people taking money off of other people. It's just one big competition now. It always has been to an extent, but now with younger generations, that being me, getting into investing, I feel like the general consensus of the majority of people these days is make the most money. But to do that, of course, you have to take the most money. So it's something to keep in mind when investing next week, because we could see this continue to climb up now as people are starting to make their money back, and we see this opportunity. But of course, the markets, in my opinion, still look massively overvalued, because when we're looking at the Shiller's PE ratio, we're still at a 35.28 for the US economy. So it just shows that I think this correction should continue, and I would actually like to see it continue, but I'm not sure if we're going to see this continue. Of course, we are in a short position on the MACD indicator on a day chart, but when we go onto a 15-minute chart, what can we see here? Well, we are in a short position, but this looks as if we might see this reverse early next week. But of course, that is just an indicator of potential short-term growth. But when we look at the moving averages here on the 15-minute chart, we can see that we are above all of them now. So that could suggest that we might actually see some more buying pressure. But I think this might have just been late buy-ins, which it does look to be late buy-ins on Friday, which could suggest that people are hedging a growth for next week in. But I don't think that's a big enough indicator to say that will happen for sure. But with Big Daddy Jerome Powell holding interest rates at the same level, we could expect to see the market react positive to this, in which it has done, and that could be a driving factor despite Trump's radical and almost spontaneous tariffs. I think this could be a catalyst for a slight reversal, which it has been. Okay, so now we're looking at NVIDIA. I want to focus on some of the big tech stocks in this, and I will be going on to some stocks in which have had breakouts, such as Celsius in the last week, which are some stocks to be watching. Looking at NVIDIA on a 15-minute chart, we are just about on all of the moving averages here, and if we go on to a day chart, we are below them all, of course. NVIDIA have been beaten down quite harshly in the last couple of months, really. Ever since November, it's just gone sideways and is now actually starting to fall down slightly. And of course, when we look on the MACD indicator, we are in a short position quite significantly, but it does look as if we are going to see this potentially reverse, but I'm not convinced there's enough momentum behind it, especially with the state of the S&P anyway. But if you can see here on my indication, I have the price to be, well, the price is obviously set at 117, but I have an intrinsic value on the bullish side to be set at 129 and a bearish price to be set at 246, is putting a mean in at 187. And with the PE at 40 currently, I think this might be a bargain to be buying into this stock at. But I do actually think investors are a bit scared to be getting into NVIDIA now, just because when you look back on the price, I mean, it is just crazy how long it's gone up for. And obviously, I think, I mean, when you zoom out, of course, in reality, this sideways action is actually not that long of a time period. But I do think this price should be going up for sure. So one stock in which has taken a big part of this correction is Tesla, and I will be perfectly honest with you guys, I think it's justified. I know I'm going to get a lot of hate for that in the comments by all the Tesla fanboys, but I really do think it's justified. I mean, Tesla has been trading at a stupidly high PE for quite a while now, and fundamentally it's a great business, right? But I don't think it deserves to be trading at a PE in which it has been previously. But despite me saying this, of course, we have seen a big 5% increase on Tesla's stock price in the last day of market being open for this week, and they are still at a PE of 1 to 1, which in my opinion is still way too much when they only have an earnings per share of 2.04 at 248. So will we see Tesla start to climb back? Well, in my opinion, I don't think so, especially with what is happening in America at the moment with people just burning Teslas. That is uncalled for. That's just outrageous. But it's definitely hurting the price. People don't want to buy Teslas. And I was actually looking here in the UK on Auto Trader the other day, which is a version of whatever you Americans use to buy and compare car prices. And looking at Model Ys second hand, they're only going for about 13 grand. I know Model Ys are the cheap ones, but £13,000 for a electric vehicle. I mean, that is really cheap, but electric vehicles just don't sell very well on the second-hand market, purely just because intrinsically they are shit. They just don't hold charge long enough. The infrastructure isn't there anyway in the majority of these countries, and it's just a bit of a pain in the arse. I mean, I wouldn't buy one. Maybe that's just circumstantial, but we're kind of rambling on here. But I think that goes to show for the rest of the country on their position with these cars. Unless you've got a place to charge them at your home, which when you think about the UK, a lot of us live in shitty flats or nothing with significance to charge an EV. You're going to struggle, basically, and people don't want Teslas or electric vehicles for that matter, unless you can. Bit of a ramble there, and I'm nearly losing my voice at this point, but we can see that they are obviously down 54.09% since their peak, but they are clawing this back now to only 49.18%. So on a 15-minute chart, we are actually in a long position now, and by quite some margin. So this could be a stock to momentum trade just looking off of this, but because of its volatility, I will not be recommending this as a momentum stock. So taking a look on the fintech side here at SOFI, this stock is still getting beaten down quite harshly, and it has definitely formed a head and shoulders pattern now and is just continuing to decline. I still don't think this is fair. I have the intrinsic value set for SOFI here to be $90 on the high side, 104 in, that's the low side, sorry, this is the wrong way around for some reason. So 90 on the low side, 118 on the high side, and 104 in the middle. I don't have a discounted free cash flow analysis for SOFI at this point, but just by looking at that, I mean, look at the numbers here on the side, we're currently at $12. You might be thinking my system is massively, stupidly bullish, but I mean, this same system puts Palantir to be set at $14. So take with that what you will. It's just Graham's formula at the end of the day on a bullish and bearish and mean analysis. So it's quite a valuable metric to go off, and I think that with that in mind, SOFI could be a brilliant buy. Obviously, we are seeing a bit of a reversal here, but I don't actually know if there's any reason for that, especially when we have the chief technology officer selling 68,000 shares of the stock on the 20th of March. It kind of indicates that there might not be a lot of faith in their own company, but I don't know how many shares he actually had. I don't know what portion of shares that is. It could be a lot, it could not be a lot. But either way, it's not a good look for the company. But despite that, we are seeing the stock actually take a bit of a hike at the moment. But I don't know if that's going to last too much longer. I feel like this hike has just happened in turn with the recent S&P hike. I feel like all stocks are just getting a bit of buying pressure at the moment, apart from Tesla, of course, apart from yesterday. But I do think SOFI is a brilliant company, and long term I'm holding this for a good couple of years, and I will be dollar cost averaging into this position. But at the moment it's not looking great. just on the chart. We are obviously on a short position on the MACD indicator, and when we look at the moving averages, we are below the 20, 50, 100, but we are actually above the 200-day moving average, which is actually quite a bullish indicator. But I'm more than happy to be buying SOFI at 33 PE. I would like to see it a bit lower, but I think for future growth, this company just looks amazing. I mean, when you look at their earnings per share, they beat this consistently, and they do have a really good growth rate of 75% in the next year. This is what basically drives my formulas, as well as the surprise rate here, which is consistently positive, which you can't see because I'm in the way, but it's there. Okay, so I think I'm going to do something a bit different here that I've not done before. I'm going to do some quick fire stocks. I'm just going to break them down very quickly. So HIMS is looking to be as if it's going to continue to see a bit of decline and sideways action, with it being around the moving averages, above the 200 but below the rest. And on the MACD indicator, we are obviously in a short position. Supermicro is a stock in which I still have to be undervalued, and I think it is justified. And we did obviously see this massive hike in the price recently, but obviously we're going to see selling pressure, especially because of the wishy-washy stance on this company, with it not being the most trustworthy in the past. And we are obviously in a long position, but just barely. We could actually continue to see this continue, but I wouldn't put any money on it, just because this stock is as volatile as a Boeing plane trying to land at Heathrow in the last couple of days. That doesn't really make sense, but we are now obviously seeing it come up to this resistance. It did actually break through it here on the 12th of March, but we are now just playing around with it. And if we do break it again, I think we might see this stock continue to grow again. But I think short sellers will always get the better of a stock like this. So now looking at AMD, I called AMD to be a pretty overvalued shit stock. I know I'm going to get hate for that again. It was just around here, I think. And it has just continued to decline since then. I have this stock to be massively overvalued, and I don't really understand the hype around it. I do think it is reaching a point now in which it should actually start to climb back up. I'm not sure when that will be, but I do think that it's going a bit far now with how far this stock is falling, despite me still having the valuation to be set way below where the current price is, which I've just realized you cannot see because I'm in the way. But we are obviously in a short position on this stock. We could potentially see it climb back up, but I don't know when that will be. And especially when US tech stocks are just getting absolutely murked at the moment by the US government with all these tariffs. It's not helping them with their relations with their customers, of course. But believe it or not, we are, of course, below all of the moving averages. One stock in which has fallen massively is Nike, as their earnings report was, of course, not up to spec essentially. They did actually have strong EPS results. They did beat their estimates. However, the stock still continued to fall on opening on, I think it was Thursday. It could have been Friday, actually. And the final stock in which I want to talk about, which is one which has seen a lot of growth recently, which is really nice to see, is Celsius. I have actually gained some money off of Celsius this time, which you probably don't care about, but you might be happy to hear, because if you watched this channel before, you'll know I've been calling Celsius to be a great stock around here. I bought in, the earnings came out, they went down 10%, my stop loss was triggered, and then it went up about 50, and I was pretty pissed. But I have been in since here, actually, and I have ridden this one all the way back up to where it basically was, so I'm pretty happy with that. But we are now looking as if we are hitting the resistance. I don't know how much more room Celsius has to grow here. I do actually want to do a analysis on Celsius again, a updated one. I actually went into Tesco's, which is, I guess, our version of Target for the Americans watching, and there is actually Celsius there now. That is not something which we've seen in the UK before. The only place you'd see a Celsius is in a corner shop or in a gym, because they'd import it from America. But now we are seeing it in supermarkets. They weren't in bulk, they were just in like a meal deal section, which is like a single cans in a fridge. But that is really positive to see. It shows that they're breaking into European markets, which is very good. So I do need to redo an analysis for them, but they are above all of the moving averages except from the 200. But of course, they have fallen down quite significantly since May 2024. And looking on the MACD indicator, we are, of course, in a long position, and this just looks to be growing. but it'll be interesting to see if we can break through this resistance. So I hope you have enjoyed this video. I apologize if it was a bit of a long one. Again, I'm not a financial advisor. None of this is financial advice. It is just my own personal opinion. I hope you can appreciate me getting up to do this. I was not in the mood for this. I'm very, I wouldn't say I'm hungover, but there's definitely a level of it. Again, I hope you have enjoyed. If you could leave a like, subscribe, it would be greatly appreciated. With that being said, I will see you for the next video. And if you are interested in Celsius, give the channel a view, because in the next couple of days, there will be an analysis coming out.